Welcome back, everyone. And I'm now delighted to introduce an incredible panel of expert impact investors from around the world who will guide you on how you can approach fundraising over the next 6 months. Our moderator for this session will be Andrew Ive, founder and general partner of Big Idea Ventures, and he'll be joined by Amy Clark, the co-founder and chief impact officer of Tribe Impact Capital, Lalemba Firi, the principal and angel investor of Africa Trust Group, Martin Allen Morales, the impact investor formerly of Apple and Disney, and Sonia Iviano, head of venture and growth banking at Silicon Valley Bank. Over to you, Andrew.
Okay, good morning for those in the US, good afternoon if you're in Europe or Africa, and good evening for those in Asia. Just making sure we're kind of welcoming everyone today. In terms of the format, we're going to be basically introducing ourselves very briefly, and we'll do that individually. Then we'll get into a few key questions, and we're looking for the audience to be thinking about great questions to ask us towards the end of the session. The purpose of today's discussion is to focus on what can we specifically do as companies when it comes to engaging with investors over the next 6 months. So we're looking at, the part of the discussion today is focused on very tangible, very specific recommendations of how to move your fundraising forward as you kind of look to grow your business. So if I can ask the first person, for example, Martin, if you wouldn't mind giving us a quick 60-second overview on your background and why you're kind of a great part of this group today.
Thank you, Andrew. I've worked in the past I'm London-based, and I've worked in the past for EMI with music and talent, a record company. I've worked for Apple, working with Steve Jobs when we launched iTunes Europe from scratch. So that's in tech and digital retail. And I've worked at Disney as a board member and running one of Disney Europe's businesses. So working with consumer brands, franchises, and a variety of product categories. My last venture, which was my own startup, was a restaurants business called Ceviche and Andina. And we worked in the food sector, the sustainable food sector. Since selling that business last November, and for many years I've worked as a trustee or a patron of different charities, an investor, but also a mentor for social entrepreneurs and startups in sustainability. And in the last few months, I've also been working with the Big Issue Invest as non-exec director, and also with Ashoka as an advisor. But my work and focus at the moment is to create, which is what I'm doing and I'm in the process of, I'm creating a collective that will help launch, partner, scale and invest with founders who are working with circular ventures in food, fashion, consumer products, and will offer them expertise, funding, community so they can thrive.
Thank you, Martin. Lalemba, would you mind coming on screen and telling us a little bit about yourself?
Cool. Hi, everybody. I'm Lalemba. I'm based in Cape Town. My background is quite varied. I've worked in government, I've worked in large corporates, I've worked in a startup and raised funding, and now I'm an investor. So I'm currently the principal for Africa Trust Group. We are fund managers for 2 VC funds, one that is focused on women entrepreneurs in SADC region, and another one that is focused on post-pandemic innovation across the African continent. We also have our own angel funds that's predominantly focused on women-owned or women-enabling businesses as well. So that's in a nutshell.
Thank you, Lalemba. Amy?
Hi, Andrew, and hi, everyone. Unlike Andrew, I don't have a jazzy background to my video. You have to put up with my garden office. Hi, everyone. It's really nice to be here. I am Amy Clark, and I'm one of the founders and the Chief Impact Officer for Tribe Impact Capital, which is a 100% dedicated impact wealth manager based out in London. We do public market and private market investing through the lens of the United Nations Sustainable Development Goals. That's our impact North Star for our investment thesis. But we also anchor the business into an impact model. We are a B Corp, and we're one of the world's top 10% of B Corps in terms of our own performance. I also, like Martin, sit on the board of Big Issue Invest, which is the social enterprise and impact investing arm of the Big Issue Group. And I'm also an advisor to the Ocean Plastics Leadership Network, which is this new, very exciting collaboration out of the US, bringing together those businesses whose business models and products and services are predicated on plastic, the activists and the entrepreneurs, and then the financiers, people like me, and obviously the business as well. And I am absolutely thrilled and delighted to be here. So thank you very much to Tom and the team for the invite.
Thank you, Amy. Sonia.
Hello, everyone. Thank you for having me, Andrew. So I'm the odd one out. I'm not an investor. I work with Silicon Valley Bank, and we're a commercial bank that focuses very narrowly on working with technology, innovation, and life sciences companies around the world, and with the private equity and venture capital funds who invest in those companies. We work with high growth companies. So our expertise is really in helping startups to scale rapidly and working closely with the board and with the investors as they do that. Within the bank, I run our venture and growth banking team out of London, facing into the European market. So working with companies who are typically high growth, high burn, loss-making companies invested in by VCs and strategic corporates. Outside of that, we have offices in the US, Canada, China, Israel, Germany, Ireland, and Denmark. Thank you for having me.
Thank you, Sonia. And in terms of my background, I'm the founder and general managing partner for Big Idea Ventures. And we have two funds at this point. The first, New Protein Fund, which is focused on plant-based foods, meat, seafood, dairy. Cell-based foods, meat, seafood, dairy, focused on climate change, animal welfare, and personal health by bringing more kind of plant-based foods into people's diets. We invest globally, and we have offices in Singapore focused on the Asia market, and also in New York focused on the US. But we've invested in companies throughout the world, Australia, Europe, and other strange and wonderful places just like Europe. In addition, we have a second fund which is called Generation Food, and this is focused on the large food companies in terms of reducing their CO2 footprints, their use of plastics in their kind of food production cycles and supply chain, waste reduction, and so on. So a lot of these large food companies are making big commitments to their shareholders, and we're going to help them meet those commitments by bringing great technologies and great companies to them. So that's the panel. We've got a really varied group of folks representing kind of different parts of impact and also different parts of the world. What we're going to do today is, and I mentioned this already, is try and focus on very tactical, very specific recommendations. The first question for anyone that wants to take hold of it is, what can, as investors, what can entrepreneurs do to get your attention?
Andrew, I don't mind kicking off.
Go ahead.
So an expression for everybody on the call: you can system surf. We obviously, as panelists, came together last week and we're talking about this. We all, in our different guises, get flooded with incoming requests for investment from incredible businesses, incredible entrepreneurs, but there's only so much any one of us in this industry can take at any one time. And for us, it's really about understanding a few things. One, what is the purpose of your business? So really be clear on what it is that you're trying to solve for and why you're trying to solve for it, and why potentially, if there are other entrants in the marketplace, why yours is more additional than existing solutions. Two, really bring your personal story to the front. Okay, you know, as investors, we often buy into people as much as we buy into the product and the solution. So the more that we can understand why you have created this, what does it mean to you as much as what does it mean to society, I think is really important. But secondly, on that as well, is the honesty kind of then embedded in the business as well. One of the things that we often see is, shall we say, quite expansive projections on finance. And Diane in the last mission actually said this beautifully. The impact investing community is as interested in purpose, if not more so at the moment, than it is necessarily in the profit motive. Now, we want you to be profitable, obviously, but we also want to make sure that you are delivering on what it is that you say your mission is. So really dial up that purpose. And in the finances, be honest, do some scenario planning. All of us on this call have been hit by the COVID crisis. You know, there's not one business on this planet who's got away completely scot-free. So we want to see some scenario planning as well in that, in terms of, you know, conservative estimates of financial performance versus, you know, slightly more bullish. But coming back to System Surf, the one thing that I mentioned right at the beginning is we're all getting flooded with requests. If you can System Surf the connections that you have and understand who first and foremost in the system is offering you the type of solution that you think you can take into your business. So which asset management houses, which private equity firms, which venture capital firms, do the due diligence and then look for the connections. So System Surf who, and then System Surf your connections so that you can actually get an introduction to somebody, because as I said, when you're getting a huge amount of emails coming in, it's very, very difficult to sometimes kind of sort through who you want to talk to. Connections always work.
So when you say System Surf, can you spell that out for me? It's not an expression I've used very often or heard very often. Are you meaning aligning what people have to offer as an entrepreneur with what the investors are specifically focused on investing in? Is that?
Yes. So Andrew, so looking across the system for the providers of the finance that you're looking for, and making sure that you are either aligning to them, you know, where you're naturally aligning, finding that sweet spot. And if you're not, but you still think there's an opportunity, take the time to be able to articulate why you think this is going to be of interest to them as well. But you have to do that due diligence in the system, which basically means surf around, see who's doing what, see how they're doing it, see whether it applies to you, but then also the connections as well. You know, we live in a world of, 6 degrees of separation. I actually think we live in a world now of 3 degrees of separation. It seems to be getting smaller, the world, in many ways. But if you can surf the connections that you have as well and get an introduction into the right type of financial provider, then again, it just brings you to the attention, I think, a lot faster than you would ordinarily. It's about investment.
To add to Amy's comment, I think.
Yeah, go ahead, Martin.
Yeah, I think, it's about getting attention. It's also about being in the right networks, putting yourself out there, joining competitions, possibly even accelerators and incubators to gain a profile. Of course, try to begin to get traction. Try to begin to get the right press, not too much, because you want to save that for other points as well. But also just look at the other companies that are in your sector and in your area, the companies that you admire and like, and ask them how they found their investors. Ask them for recommendations, ask them for introductions. And then as Amy says, look at the landscape of who's out there, who's doing stuff that's similar to what you're doing, to see if you can learn from them. And then check the platforms that provide information about funders. In the UK, we've got Good Finance. We've got a variety of platforms that can give you lists of social finance investors, impact investors, and just do that research.
Yeah, and Andrew, I think I'd add to that very much on the research side. Once you've done that, a lot of companies and founders will then put together some sort of initial pitch deck that they want to share their idea with the investor. And I think the key there, particularly if it's the first time that you have shown your company to an investor, is keep it simple. We spend a lot of time helping our companies as they prepare these pitch decks. You've got your head in your business so much and you know so much about it, you sometimes forget this is the first time an investor will have seen it. And remember that investors are seeing tens of decks every week trawling through it. So you have to get to the point quickly. What is the problem that you're solving for? And is there a proven demand out there? What is the value in the business and how have you arrived at the value? Make sure you put in details about the management team, their background. Have they done this before? What is their level of expertise? And the key is, if you're going to be doing analysis on things like the size of the market, competition, and so on, don't have a deck that talks about lots and lots of different things and then you only get to your ask at the end. That's hard work for an investor. They'll probably throw the deck away before they get there. be very clear up front. What is it you're looking for? What kind of investor are you looking for? How much investment are you looking for today? And what are the uses of that investment going to be? So being very crystal clear about the ask makes it easier for the investor to navigate.
Yeah, I'll add that an alignment between your mission and the investor's thesis is really critical. A practical example of that is that we are primarily gender-lens investors. And so we primarily invest in women-owned, majority women-owned, or women-enabling businesses. But we still find, because entrepreneurs might not be reading up on the investors in that much detail, that they take a spray and pray approach where they will send the same deck, the same pitching message. It feels so impersonal, and it feels like you just didn't even bother to find out what we invest in. And so ensuring that your business, your mission is a match for the investor's thesis is already one step in. Otherwise, you might have an investor that focuses, for example, on clean energy, and your product is nowhere near clean energy. So that upfront, knowing who invests in your area. This can also be geographical as well. Thinking about who invests in your particular region, whether they're based in your region or not, is really important.
I was going to say, just to continue what Lelemba said, somebody actually said this to me a couple of years ago. This is not Tinder, okay? This is not a game of numbers. You know, you need to be really mindful and considerate as to how many times you swipe. I don't even know which way you swipe to say yes, but anyway, whichever way you swipe to say yes. Completely out of my depth here, but whichever way you swipe to say yes, you know, just be mindful how you're swiping. And to Lelemba's point and to Sonia's point, just be really, really, really clear on whether or not there is an alignment there, and then get to the ask really, really quickly.
I think there's also another phase. As an entrepreneur myself and someone who has sought funding before, I think there could be another phase. It's got to be done in a smart way, but that's when you're creating the product and creating the business itself. And that's through networking, that's through picking specific people to watch your journey and excite them through it. And if you engage people at an early stage without, you know, if you build relationships, nurture relationships based on what they want, to everyone's point, to Lelemba's point in particular, based on their values, but just say, look, you know, I'm not pitching anything, I'm just starting to create something. And I'd like you to help me would you mind just giving me a couple of thoughts on this and that? And if you can build a rapport with individual people, they may be your investors, or at the very worst, they'll be your customers, or they'll be your ambassadors behind the scenes. And that can create opportunities of introductions and all kinds of positives.
That's true. I'll agree with that. And I think it's just healthy for entrepreneurs to start to speak to and know investors early in the process, even before you need the money. It just helps you think about your business very differently and structure it in a way that makes it investable down the line when you do need money. You know, investors will help you think about scale in a different way than you would, you know, early on in your process, so that you are building for scale, for example. They'll help you think about your processes so that there's a level and layer of transparency that you can provide in order to be attractive for investors. You know, cleaning up your records well in advance of actually needing investment. All those key pieces that maybe as an early stage entrepreneur, you're just too busy just trying to do the business, that the business gets in a little bit of a messy state. You'll be kept up to scratch if you just speak to investors, whether you need them or not. Yeah.
But by the way, that's because the values, as Lelemba and others have said, because the values are aligned, and you also have to make sure to see if, you know, what investment you need at what point. You might not need any investment. Your first question should be, how can this be self-sustainable without any investment? How can you gain traction? And then, you know, then your focus is completely on creating that traction, creating those sales. But you must remember, when you go to an investor, that's an investment product you're creating for that investor. It's a different thing to the actual product you've created for the marketplace. It's an actual different proposition. It's completely aligned, but it's the positioning of it and the focus of it is slightly different.
Cool. We have some questions that are coming up in the chat, I think, which we might want to cover. One of them is, have you invested in companies pre-revenue, or would you recommend angels instead for businesses at this stage?
I would say that, I mean, remember, from our point of view, we invest at Series A, so we'll kick in the private market deals that we will do. We kick in at Series A. That's not to say that we don't necessarily look at funds that are looking at very early stage startup, but when we are investing directly, we'll go in at a Series A. We're in the UK, and you know, Martin knows a lot of these as well. There is quite an active angel community in the impact investing space. It's still difficult, I think, to get their attention the same way it's difficult to get a fund manager's attention. You know, it is. It's not tricky. I hope that things will start to improve as we come through this COVID crisis, given the other crises that are looming still in the background, or very much even now in the foreground. But from our point of view, we will kick in at Series A. I mean, Sonia, you I think are earlier.
Yeah, so I think the vast majority of businesses, by the time they get to a Series A, an investor wants to see revenue traction. However, there are certain businesses that will be much longer in their gestation before they get to market. So for instance, particularly hardware companies, space companies, you know, these companies require several rounds of equity before they get to revenue generating stage. If you think of some of the new mobility solutions that are being developed at the moment in terms of virtual land off and takeoff vehicles, you know, these businesses are not commercially viable yet. They're not earning revenues, but they've been funded for over 5 years to the tunes of hundreds of millions by large VCs. So I think the question is, like, know your market. If you're like a software company and you don't have revenues, it's quite different to being a hardware company that requires lots and lots of capital to get to the stage that it can go to market. So there are definitely specialist investors out there who have an appetite for that. And it very much depends on your experience, I think, the USP that you have in the product. You know, you really need to know your market if you're pre-revenue looking for funding. You need to be able to show that what you have has a milestone-based route to market. So you need to be quite clear about, if this current round of funding you're asking for is not going to get you to revenue generating stage, what is it going to get you to? Is it going to be a milestone that, for instance, is going to get you to sign initial proof of concept with large enterprises? So you need to have a very clear plan and clear path as to how you're building value in that company for the investor before it even gets to revenue stage.
I think sorry, Martin, go ahead.
I just add that, you know, it's horses for courses, and it depends where you are on your curve. So, you know, read and research reports and look at those organizations to start with that might be able to provide funding, connect with some of those. Then if you're initially starting from scratch, you know, you may need it, you may get traction on your own, or you might ask family, friends. Banks are there to provide some kind of funding sometimes, depending on where you are and what country you're in and what the situation is there. But then there's also academia and think tanks, there's accelerators and incubators, there's also even strategic partnerships with corporates that might be able to supply or help your supply chain. And then there's the whole series of angels, angel syndicates, VCs and PEs.
There's some really, sorry, I was going to say there's some really interesting stuff in, I think, in what Sonia and Martin have just said, in that we're starting to see the rise, as Sonia's alluded to, of social unicorns. And a lot of them tend to be bedded in tech-based solutions to some of the world's ills. And what we tend to find there is, to Sonia's point, you get a huge amount of inward capital pre-revenue because of the potential of that technology to solve for the issue. And I don't know if anyone's read Reid Hoffman's blitzscaling book, you know, because these tech companies deploy blitzscaling, and it's very well known amongst the VC community on the West Coast, and more broadly, you tend to find a lot of capital coming in. You know, if you're in an education business, if it's not an ed tech, or if you're in an agriculture business and it's not necessarily an ag tech, it can be a little bit more difficult to get that funding. And as Martin said, look at some of the partnerships between the NGO community and the academia community. So a couple of weeks ago, I sat as a judge on the Skull Venture Awards. Now, all of the finalists were pre-revenue, and some were literally almost sort of just beyond concept. And you can create inward, basically grant-based capital coming in. It comes from the Skull Foundation via obviously the Skull Centre at Said. There are lots of these initiatives around where if you are pre-revenue, you can access either through alumni networks or through obviously the relationships that you have. I think it's, there is always a pot of money somewhere. You just need to work out where it is.
Yeah, and I think for entrepreneurs, it's really important to understand the types of financing that are out there and that are available for you for the different stages of your business. I like you alluding to grants, because for a lot of the businesses that are just trying to prove a concept, you might want to shop around a little bit for the grant funding that might be available. We always encourage entrepreneurs to sell before you make. There's an opportunity for you to be able to sell your business to a large corporate even before you start building your solution. For example, if it's a tech solution, that way they're able to fund even just your proof of concept, because once that is put in place, and then it's a lot more attractive to the angels to know that it has worked and there's a business case and there's a business that's actually put money to using this solution. And so thinking creatively about your funding pipeline is really important from get-go. Think about what options are available for your industry. There's a lot of grant funding out there, particularly for some of the questions here. I've said health and education and agriculture. Those are ripe for grant funding, really. And you shop around before you even start to think about equity investment, at least to get to a part where your business is post-revenue and then a lot more attractive for an angel or for a VC. You actually just get even a better valuation when you've proven some traction.
Just to add to that, to meet the changes we need to meet, the objectives we need to meet by 2030, to meet those, we have to think in small ways and big ways. We won't all invest in or work or partner with unicorns. So I would caution a little bit about, following the unicorn model. There are social unicorns starting, particularly in tech, and tech can be transformational and can be systemic in terms of its impact, which is wonderful. But most will never reach that. But most will have a fantastic impact locally, and most could also follow a social zebra model, which is as powerful and as impactful and probably even more sociable. So I'd be cautioning that, particularly so that you don't become a capital junkie. And we've seen, and I have many friends that work in tech who are forever fundraising, forever out of profit, forever close to a cliff, and actually having stressed out lives and not having great impact. So, the majority is interesting to try and focus on.
I think it raises the whole question about who your investors are as well, and how do you line up the right investors. And I know for us, when set the business up, we anchored our business as a B Corp, partly, as I mentioned earlier, for the authenticity, so that we were seen to be impactful from cradle to grave. There are other anchors out there that people can use, but I think when you're anchoring effectively the business legally and from a cultural point of view into something that is about impact, positive, sustained impact, it does create a slight filter for the types of investors that you will then attract. And one of the pieces of advice I would say is, if you can think about anchoring your business somehow into that mission even further legally, then to a certain degree, it does do the job of attracting a certain type of investor to you. It tends to be a values-aligned investor to you as well. That's certainly been something from my experience. Lelemba and Sonia, I don't know how that plays out in the work that you do.
Sonia, do you want to take that?
Sorry, yeah, it's coming off mute. I was actually reading the questions because there's a few really interesting questions coming in. If you don't mind, we'll skip on. So there's an interesting question on EdTech, specific to the African continent, but why is it so difficult to raise funding for EdTech companies? And I think I'll hand over to Lemba to talk about Africa in particular, but it also has I suppose it has a more of a global question, because if you look at some of the areas that have been funded, EdTech is one of those that has traditionally not been seen to be as prolific maybe as some other software areas. I think that's changing. I have to say, from what I've seen some really good companies getting funded, and actually in many ways the COVID-19 environment is a huge boost for those companies, because they were trying to fight an uphill battle in some ways about sort of changing the way that we interact with content. I've seen companies like Lingo Kids, Firefly get really well funded. And then there are also some geographic differences. So for instance, EdTech companies in Asia have done particularly well, because there is an environment in Asia of continual learning. So not just looking at kind of primary, secondary and third level education, but there's a continual learning piece that goes right through people's careers. So there is that demand for personal development all the time. But Lemba, do you want to talk a little bit about what's going on in the African scene?
Yeah, sure. So touching on EdTech particularly, I think traditionally the investment has not been very high in the sector based on two things. One, because predominantly education is a public good. And so a lot of investors kind of expect that type of support to come from governments and more the big, DFIs at the very least. And so there's been less investment into that space. I do agree with you though, this is the time for EdTech. With the pandemic, it has kind of accelerated the need for the space, and we're starting to see a lot more VC starting to look in that space. However, one of the big challenges is one, technology being available across the board at an affordable rate to meet scale, and two, stickability, people needing to stick onto your platform. Particularly, it's quite competitive out there. There's a lot of platforms that pop up, and so a need for an entrepreneur to prove why their platform is better than the next. And three, education content is so much available for free online, and so it's really difficult to differentiate yourself when people really can Google up stuff and put stuff together. And so I think this is, if there was ever a time, this is the time for EdTech now, and for entrepreneurs to be creative and starting to think about which particular segment of education they're looking at. We recently invested in an EdTech platform during the pandemic that's focused on the smaller kids from 18 months to about 3 years. And so you can find niches that make you a lot more attractive. And investors right now are really shopping for EdTech, so it's the time. There's a question on scaling on the African continent being difficult because of the lack of protection of IP and a hostile innovation environment. I think, Mark, the competition is everywhere, and one of the things that you could be helpful, particularly when you're thinking about how to protect your IP, is getting into incubator spaces that are already specializing in a lot of that. This is an issue not just in Africa. IP is an issue everywhere, and so get into acceleration hubs, innovation hubs that can help you think through your business. Yeah.
There's a really good question on here, actually, and I think just very, very mindful of the time. We've only got a couple of minutes left, and I think it would be good for us to leave everybody listening in with hopefully something really useful around, are there lists of impact investors? Where do we go to find out who's doing what and where, and who can we find out is doing what and where? And I think it would probably be quite useful for us kind of maybe all to answer that quickly in turn. I mean, for my part, I would say the GIN database, the Global Impact Investing Network database on PE and VC funds, is a really good starting spot. And then I would say Nexus and Tonic, which are two networks of private individuals as impact investors as well. You can look to create relationships both with Tonic potentially and Nexus. Martin, what about you? Where would you direct people to?
Yeah, and just to add to that, there's Good Finance has got a database there that's accessible. There's you can search per category region. That's just UK. Pioneers Post has been publishing some really interesting links to a variety of investment, particularly social investment, and I can provide that. I've also been doing my own research with a group of people, with our collective as well. So if you reach out to me, I'll be able to provide that.
Great. From the Africa side, Africa Venture Capital Association, AVCA, you can look them up. They are split into regions, and so if there's a specific region that you're interested in, you'll be able to find that there as well.
Yeah, I think you've covered a lot of it. The only other thing, because I know we've a global audience, is a lot of these businesses are supported with content at an early stage by your local government and sort of local institutions, whether they're at a national or a more local city level. So, you know, a lot of those relationships and networks are plugged in there. So that's often a good place to start as well.